Weekly stock market update, friends. Here we go right into it. What have we got today? Well, it's earnings season in the US, so there's a lot of opportunities and a lot of money to be made as well. So what am I seeing? Well, first of all, before I go into that, remember it's not individual financial advice, and therefore, remember that. So our end goal with all of the weekly updates is this. You got to remember this. The frequency of rolling 2-year S&P 500 returns is 1950. Average positive return is 32%. If you've not been getting 32% returns over a 2-year period, then you're doing something wrong. Positive returns 88.5% of the time. Your IFM wealth manager is not achieving this because, quite frankly, they're not very good. The worst return is that, now my job is really actually, funnily enough, to focus on those and make sure we avoid those. These tend to take care of themselves, okay? And that's what this conversation is going to be about. How good am I? Well, here's one of many testimonials. You can see video testimonials on alpeshpatelreviews.com. In 12 months, I've seen a 30% increase in my portfolio. Trevor, thank you very much. You're one of many. alpeshpatelreviews.com if you want to see the rest. So where are we on valuations? Microsoft, you're paying $27 for $1 of expected future profits. It's expensive. So is NVIDIA. It doesn't matter because expensive or valuation is only one measure of future stock price growth. As you well know, with those two stocks as a good example, revenue growth, profit growth are quite important. So yes, we will look at valuations on these companies and see if there's any opportunities there, but we will not be put off by the red overvaluation in the others because they may well give opportunities based upon growth. This is the earnings calendar over the next 7 days. What might move markets? Well, what might move markets on there is Alphabet, Visa, that's coming out on Tuesday. What else might move markets? That's what Microsoft, of course, will move markets. Meta. So Wednesday, cancel all your plans. It's a big day. Eli Lilly could potentially move markets as well. What about going beyond that? You've got Apple and Amazon on Thursday, basically right off your week next week. MasterCard won't move markets. Uber, not really, but these are big firms which will give some direction to overall sentiment. Feel free to pause the screen, like and follow for more, of course, and have a look at alpeshpatel.com/links. Don't forget. So why do I look at this? When you look at the Excel that I'm going to go back to, it is because it makes my life incredibly easy. It means my clients, people like you potentially, who might be on the Great Investments Program, can go through 10,000 companies and we can narrow it down by value, growth, income, cash flow, but it still scares them, so they get to speak to me. That's the game changer. They get to speak to me one-to-one on a call so we can then work out what suits their risk appetite. Croakey is from Goldman Sachs Wealth Management. Yes, I sold the intellectual property from there. Others don't have it, don't know how to use it. Momentum is from the hedge fund industry, and so is Sortino and Alpha. I set up my first hedge fund in 2004. If you want to know the approach and how I took the know-how from Goldman Sachs Wealth Management and from Nobel Prize winners Daniel Kahneman, Richard Thaler, and Eugene Febvre, and lectured on it at the University of Oxford, then this book, with wonderful reviews from hedge fund managers, Bloomberg TV, and Financial Times, you can get from alpeshpatel.com/links. So the past week, yeah, some isolated greens, a heck of a lot of red, nothing particularly to worry about at all. The past year, phenomenal. My job is simple. My job is to make sure that if the market does something like what you see on screen, that I'm in a position to take advantage of it. Okay? I cannot make companies go up. I cannot invent companies in a falling market, for instance, like 2022, which are going up, if those companies aren't going up. 5 years out of 7, this happens. My job is to put my clients in a position where they can take advantage of the opportunities when they arise. I cannot create these companies. I'm not clever enough. Therefore, we ride their coattails as a good capitalist and invest in them and make money from being a shareholder in them. Okay? Exchange traded fund, 1 month past performance. Well, they're these, and of course crypto's gone up, but I'll do a separate video on exchange traded funds. So the S&P is up 22%, the Nasdaq's up 20% year to date. Phenomenal. Absolutely phenomenal. Yes, there were periods of wobbles. We can handle those because they were baby bears. What are baby bears? I've written an article about it. It's my application to the Nobel Committee on Economics to get the prize, because I think it's ingenious way of ensuring that people don't panic during these falls, and how we know based on short-term and medium-term average stock prices. Year to date, these are the sectors. As you will know, I do not gamble on or bet on particular sectors. I look for the quality companies. And the reason for that is it'd be a gamble. If these were horses, how do you gamble which ones are going to win? We don't do that. We don't try and outsmart the market and say, well, we're awfully clever, we're going to tell you this is what's going to happen. No. Instead, my job is to say which companies have got momentum, which have got value, which have got growth, i.e. which ones tick all these boxes, because whichever of these horses win, we will win. Because we picked a subset of a subset of a subset. And guess what? We win. So there you go. To the extent that over the past year, when you get a market tailwind, which gives you a 38% return on NASDAQ, don't forget, 2023, 55% was NASDAQ. S&P, 38% as well. Well, we're in a position to capture that. Now, is it easy? Well, the hardest part is making sure people don't panic during these periods. The hardest part is when people join my program late and 6 months of 0% returns, let's say. Well, we explain to them over 12 months, you want to have a look at it, and that's how you evaluate, okay? And in the long run, you capture those opportunities. Now, in falling years like 2022, we had to hold cash for most of the year. But I can tell you that an IFA, a wealth manager, or fund manager will never, ever, ever tell you to sell their product and just hold cash, because they have a conflict of interest. I have no conflict of interest with you at all. FTSE 350 stock rises over the past month are these companies. Please make sure that you have indeed taken note of that. Not because you want to put money into them, that's momentum. I say take note of it because actually all they've got is momentum. They haven't got undervaluation or growth or all the other things that are needed for quality returns. Okay? So there's a problem right there. Now, S&P 500, we are at this level, we were here, so we might be overbought and it might fall. But I would only exit at a daddy bear. What's a daddy bear? Overbought and the average prices short and medium term are falling. Okay, we're not at that stage. So that's where we are. So whilst I am cautiously optimistic because the market might keep rising and we're not falling, I am mindful of the fact that it could well fall. Okay, so that's how I look at it at the moment. NASDAQ, it's also like it was here. So when I did my show on Bloomberg TV, this is exactly what I'd show on screen. I'd pull it up on the Bloomberg terminal, I'd put it on the screen, and I would tell my colleagues, this is where we are roughly. And unless this happens, we will not exit. It is why I've won numerous competitions and why I've written 18 books on this subject, because when you find something which works often enough, not guaranteed, works often enough, you've got an edge. And an edge is what you need to make success out of it. Now, that's where we are here. It's been going a bit sideways. Will it break through? Maybe after the budget. Don't know. I'm neutral on it. Let's look at the top 10 S&P 500 stocks over the past month. They've done this performance. Let's see if any of them are worth examining for ourselves and our own investments. So that's what I'm going to look at right now. What have we got? United Continental Holdings. Now, that's a 9 on my value growth income. But as you will know, those of you who follow me, it cannot be a special situation unless the momentum, this bit, is down here and has room to rise. So whilst it's got all of these buys, it can't be a special situation. So as a non-special situation, what might be the possible trade on this you might want to look at? Right? One way to look at this is you look at the projection, historic, you apply it there over 12 months. You say, well, that's the potential reward. What's the reasonable risk? Well, you could put a stop loss there, which was a resistance, which then becomes a support. So that's your downside risk, which is about 33%. If my maths isn't off, it's about closer to 27%. Okay, and the reward is a multiple of the risk. Let's say the risk is 25%. You don't want to lose more than, say, £2,500, and therefore you wouldn't buy more than £10,000 or dollars of that stock, because 25% of 10 is 2,500, which is most you wanted to lose. So that's how the mathematics of position sizing or money management, risk management is based upon, well, experience and expertise, and the reward to the upside. That's a non-special situation because it can't be special because it's a 9. Whilst it's a 9, the momentum is too high. Okay, if I was to do that with a Wells Fargo, it can't be special, but if it was a non-special, you'd probably put a stop there. That's your projection. You might disagree with the projection, in which case don't do it. There's no guarantee these are going to go up. This isn't even a 7, 8, 9, but that looks like it go up. This is very high risk because it'll most probably fall again. So not one I'm particularly interested in. That's a 7. It's been one of our picks from before. It's back in at the 7. It's no longer contender for special because it isn't down there. It's a bit too high up on this window up here, so it's a bit overbought. Therefore, it continues being one that I hold. But, and those who are in it, you're welcome. But if you wanted a non-special, you'd really be estimating that positive return happens. You will get some of these drops of 15% during that period, and you'd probably put your stop loss there, which gives you a multiple risk to reward. That's how you do it as a non-special situation. This could be special, except it's not a 7, 8, or 9 on my value growth income, so I wouldn't. And so I'm going to just leave it. Palantir, people love it. They like all of this. It isn't a 7, 8, or 9, and it's overbought. So, a little bit on the risky side. If you thought this was going to continue going up there and you wanted to put a stop loss here, well, you've got 100 to the upside. You've got a stop at about 50% to the downside, or 50% taking all the way down. So less than 2 to 1 reward to risk, so that's fine. Or more than 2 to 1 reward to risk, so that's fine. Okay, win isn't a 7 and a 9, so it can't be a special situation. Arguably, the momentum's fine, but on a non-special, I'm not going to do it. What about that? There, and your stop there. High risk, it's not a special because it's not a 7, 8, or 9, and the momentum isn't even to be seen. Nvidia, well, if you're on my Great Investments program, you'll know exactly why and how we got into this in January, because the numbers were there on value growth income. It is an 8, but it's overbought, which can keep going. And as you know, I own it and continue holding it. So did my clients who got in last year. And as a non-special, if you really wanted to do it as non-special, you'd put the stop there. Okay, Morgan Stanley, there's enough momentum, but it's not 7, 8, or 9. So as a non-special, you'd probably put the stop there, and that's your projection to the upside on the basis that it continues rising like this. Costco, you can work this one out yourself. For those on the program, I'll do the private Telegram. I'll do private Telegram on Apple, on Amazon, on Microsoft, as well on Meta for those on the Great Investments program. Don't forget, I'm on YouTube. There's more to come. For those of you looking at your pension and thinking, I just have no idea how to do a SIP. What is a SIP, self-invested personal pension, or an ISA? How do I save and buy these stocks? It's really simple. It doesn't have to be Barclays. It could be anybody. It could be Hargreaves Lansdown, anybody. You go online. It's really simple to get started. They make it so simple for you. You put in your details, you wire money into the brokerage account, and then you buy, say, £1,000 worth of Microsoft or whatever it is of the companies. Okay. These are a bunch of brokers. I'm not recommending any of those. And these fees, check with the broker, because actually they have caps on these, so these aren't as bad as it looks. And the exchange rate is the interbank rate, so that's not bad, 0.39. And you're holding for 12 months, so you're not actually suffering that all the time anyway. And one of the reasons you might want to invest yourself is this. This is from the Daily Mail, and this is whilst this is 2022, there's been so many of these before and after that. Has your pension lost a fifth of its value this year? We revealed the lottery of returns on work retirement plans. If you're in work, you better get in touch. If you're in work, you better check that plan. Okay? 8 biggest of these default pension funds have all lost value this year. 8 biggest. So the chances are you're with an employer who's managed to lose you money. All right, in your pension. They're screwing you over because they don't want you retiring. If you make too much money, then you'd retire, wouldn't you? And they don't want you doing that. More to come. Bank of America, we expect that to continue, so it continues holding on for that. All fine. Netflix, I've been covering, and I don't own, as you well know, but I've been covering since that period after it had these great results. And the reason I've been covering it, as again you will well know, is, well, very simple point, that I wanted to show you that we have so many opportunities. There are those that we don't even buy into. Do I wish I had? Well, I guess it's been phenomenal because I've missed out on 100% return pretty much. So yeah, actually, in hindsight, I wish I hadn't shown off and said, "Oh, look, you can just do things that we don't even buy." It's an 8 at the moment, but it's overbought, so it couldn't be a special situation, but it could be non-special if you put it as a stop loss there, and that's your target over 12 months, if you wanted. Walmart, I'll discuss on the Great Investments Program private channel for clients. So will I with Berkshire Hathaway, Warren Buffett's thing, and Eli Lilly. I'll leave that for that as well. Walt Disney, it was a waiting game because, well, it's just a waiting game. Okay, but it just shows you, just because it's a big name, it can drop 30%. If you don't like the more volatile ones, don't buy the more volatile ones. How do you know whether they're going to be volatile or not? You just look at their historic price movements. Simple. But if you do like the big names and they ticked your boxes once, you wait 12 months and you have your stop loss rule. And that is that. Don't forget, we've got 4 new services and these have gone down so well. I had a dinner yesterday where my clients were really pleased. The 40% hedge fund return stock. So any hedge funds generating 40% per annum, we look at their stocks and see if they meet our filters. Tactical momentum intermediate term. These are 3 to 5 month holdings based on momentum. Again, reward to risk 2 to 1, at least a 40% return likely based on the projections I've shown you today. Elite bank wealth stocks, these are the ones which, again, 40% to the upside, downside risk 20%, half of that, so reward at least 2 to 1. And the banks have just given them a buy rating. Exchange traded funds 40% over 12 months. And again, reward to risk 2 to 1 with strong momentum. Okay, so I sort of explain it here. And these new things for the Great Investments Program are for people who are looking at, well, they might be looking at lower volatility, higher return funds. So it's ideal for those who want to build up their pension pot. It might be for those who want to hold for 12 months and are fed up with their IFAs and the poor performance they've been getting there, because this is based on the selections of Goldman Sachs Wealth Management, for instance, in this case, JP Morgan Wealth Management, and so on, where we think there's a reasonable 2 to 1 reward to risk ratio. Follow me on LinkedIn, won't you? There I am. I'm a top voice now on LinkedIn. It's something which they've also given Bill Gates. It's the only thing we've got in common. And don't forget to look at the campaign for $1 million. The reason I want you to look at the campaign for $1million.com is you could be able to download a copy of the book, get internships for free, get a load of free videos and information, but also if you wanted to join the Great Investments Program, it is going great guns. I'm so excited and happy about it, so I'm just promoting it tons now. Thank you all very much and hope to speak to you all soon. Thank you.